You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Thursday, 21st day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see my screens, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, let's do that. Let's look at a chart. Let us start out this fine Thursday. Let's go to our 4 hour. Okay. And on this 4-hour chart, you'll see our monthly trading zones. And here we go right back to November the 1st. We open the month right at a zone. Price takes us to the zone overhead. We consolidate. And right here, we begin a 10-day consolidation. From zone up to the zone, back down, back up, back down, back up, back down. You get the idea. And then we drew this trend line last week. We had a swing high and we had a lower high. So we were waiting for this to potentially signal and taking out this swing high that we were done with this consolidation and ready to move on to the zone overhead. Almost got there. Swing high was 31.32.5. Right into some resistance. Sent us back to the zone where we consolidated. Remember, these are 4-hour candles. Caught a hop. Back down, testing it again. And this is where we sit on Thursday, 21st day of November, 2019. So what's the next high probability move? Well, from this point, still that zone overhead. If we just did a little trend line, there we can kick it out there. Now, if you fidget and worry and furrow your brow over getting your trend lines exactly perfect, just stop it. Okay? It's a visual aid. That's all it is. So if I connect these 3 tops, 1, 2, and 3, 1, 2, 3, 4, we have this outlier. Okay, think prairie dog, sticks his head up, looks around, burrows back down underground, back to the safety of the zone, where it found good support, good enough to bounce it up to, well, about 6-7 points in this 4-hour candle. So now, what we did back here, we had to get above that trend line. Same thing here. Obstacles on the way up. Now over here, this is really important. When we broke that trend line here, we had no obstacles in our path because price had never been here before. If you look left, there's nothing there. Okay? Different story this time. We take out this trend line. Now we have obstacles. We've got an obstacle there. In fact, this whole area right here. Okay? That encompasses that. And we have this obstacle here. Obstacles can also be thought of as targets. We get above the trend line, you take a long trade. Okay? This area could be your trade 2 target. If your trade 2 target is actually the zone overhead, if that's your plan for this trade, then these become obstacles as opposed to targets. Okay? Or this could be an initial target, secondary target, final target. But the story is when price gets back to this area, we expect turbulence. Okay? It'll probably grind for a bit. If there are enough buyers in the order flow, that should power it through this obstacle. And then pretty much clear sailing up to this obstacle. Now, this is an all-time historic high in the S&P 500 Emini Futures, the most traded financial instrument in the world. Loved by both retail traders institutions. Everybody loves the S&P. All-time historic high. So when price gets back there, look out, bumpy ride. Once we get above that obstacle, and we will, whether we make it on the first time up, the first try, or the 50th, we will eventually get above it, because the S&P 500, as well as the other indexes, they are best of breed indexes. Now, the S&P 500 has 500 companies. When one of them gets sickly, misses earnings a couple times, they will unceremoniously kick them to the curb, and they'll bring in a fresh, strong bull, that hasn't missed their numbers in 7 quarters. That's why over time, every index will go higher. There'll be sell-offs and crashes and all sorts of stuff along the way. But over time, look at any index back to the day it was created. It starts in the bottom left-hand corner of the chart. It takes you to the upper right. Okay? That's an important thing to remember. Okay. So we're just kind of sitting still here, treading water at 3101. These are the current monthly zones. I'll go over the current weekly zones with you in a bit. Let me give you the numbers from around the world so Michael can give us a recap of what happened in the live training room today. Get some fresh data going. Come on, fresh data. Here we go. All right, starting here in the U.S., cash markets. Dow currently down 37 points. NASDAQ down 34. S&P 500 down 6. And the Russell 2000 down 9. In the commodity basket, crude oil up $1.17, trading 58.18 last. That's a gain of a little over 2%. Gold down $6.10, trading 14.6810 last. In the Asian markets, at the close, the Nikkei posted a loss of 109 points. Shanghai lost 7. Hang Seng dropped 422 points. That's a loss of over 1.5% for the Hang Seng. In the European markets at the close, FTSE down 23, DAX down 20, CAC down 12. That gives us a red day in Asia, a red day in the UK. And so far, it's a big red radio Thursday here in the US of A. Let's go to Michael, get that recap. When I come back, we'll talk Concierge Trade Alerts. We'll talk Logic 247. We'll talk to John. And today being Thursday, it is Dr. Tom Day.
Dr. Tom Day.
And we'll be talking about investment grade gold.
Investment grade gold. Okay.
All right, it's all yours.
All right, I think you should be looking at my charts. Yep. Okay. Here, let me slide this over, and we'll get started. And here we go. Good afternoon, everyone. Today is Thursday, the 21st day of November, 2019. If you've not taken a free trial, I do the same thing every day. If you've not taken a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial. Apply.CFRN.net. You can click on that, and it will bring you to this page, eminitrainingschool.com. When you get to this page, all we ask for is your name, your email, and your phone number. You hit register now, and you'll be sent a confirmation link. Once you click the confirmation link, then we know you took the free trial. Okay, that's when we finally know at that point that you took the free trial. Okay, so you got to make sure that you click that confirmation link. All right. Now, this. Here we go. All right. So today was one of those days where I should have put the mouse away, but I can't. But I should have. All right. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of November, as I just said. We made 2 ticks in crude, 12 ticks in gold, and we lost 7 ticks on the ES. That put us at plus 52.5. Now we ended positive, so that's why it's not a blue day. We did get the goal for the day. It took us 36 minutes and 4 trades to get to 132.50, and we took a total of 8 trades this morning. So on the month now, we're at $2,158. That's over 15 days, averaging $143 per day. $143 per day. On the year, we're at $32,945. That's over 212 days, averaging $155 per day. $155 per day. Okay. Let's get into the markets. Show you what. See, I missed these 2 really nice trades right here on gold. I'm upset about that. But we did get a good trade right over here. You know, we got, let's see, on the first trade, we got a break even. Second trade, we got a break even. There was a trade here on momentum short that I missed. Then we finally grabbed this one and we picked up 12 ticks on it. And then Slingshot got all messed up down here. And once we started trending again, I had drawn this line in there and I said, we need to close up above that line. And we finally did. And right here was an opportunity for a long trade. Right there was another one. And I didn't circle this right here because at the time the cycle was going down a little steeper. And I said I didn't want to do it because the cycle was going down too steep. And let's see. During the break, did we get anything? No. Nothing during the break. Okay. And that was gold. And now the euro, again, we got nothing on the euro. From the open right here, it went up above the BBC, back down below the BBC, back up above the BBC, and back down below the BBC. So we didn't have any opportunity to trade it using the 2 trade setups that we do in the room in the morning. Now, this is a nice trending MA1 right here. So using the other trade setups, there was a shorting opportunity right here, right there, and right there to grab all those legs. Okay, that's using the other trade setups. Okay, crude oil. Now, crude had a huge run today. If you look at this in the pre-market here, it had a huge run up. My number for next week is still 55.32. I'm not changing that. On crude, we had just a couple of trades, and we got 1 tick out of each trade. 1 tick there and 1 tick there. During the break, there was nothing that you could do here during the break. Okay. And now we'll do the ES. We missed this first trade here on the ES, and then we picked up 1 tick on this one. Actually, no, we picked up 1 tick on this one. And go all the way back to the beginning. Started out in a weekly trading zone, and it kind of stuck to it for a little while. Then it broke away a little bit, and we picked up 1 tick on this trade. We had a break even on this trade. We missed that one, and we stopped out on that one. It went back up to the weekly trading zone. Now, Dwayne and I, we were talking this morning, just flipping back and forth between time frames, talking about how it should get back up to the BBC right here. But right now, you see how the cycle is going down? It's pulling back up to the BBC, and it's probably going to get rejected from the BBC right here. It's probably going to consolidate for a little while right here at this level. But probably not going to be any good trading in there for a little while. Okay, you got to wait until it starts trending one way or the other. Remember, step 1 is make sure you have a trend. Make sure you have a trend. Okay, and that was it for the morning session. So with that, let me go back here. If you have not taken the free trial with us, go to the home page at CFRN.net. Right here in the right-hand column, it says 5-day free trial applied.cfrn.net. If you click on that, you'll be brought to this page, where all we ask for is your name, your email, and your phone number. Hit register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the trial. All right. You could just go straight to eminitrainingschool.com as well if you want to. We'll go back to the spreadsheet and do this right quick. And let me see. Okay. As I said, today is the 21st day of November, 2019. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 2 ticks in crude, 12 ticks in gold, and we lost 7 ticks on the ES. Put us at plus 52.5. Today it took 36 minutes and 4 trades to get to the goal for the day. At that point, we're up $132.50, and we took a total of 8 trades. On the month now, we're up $2,158. That's over 15 days, averaging $143 per day. On the year, we're at $32,945. That's over 212 days, averaging $155 per day. Now that's gross. If you want the net numbers, come over here. See, with an $8 round term commission, your net so far this month would be $1,286, and with a $5 it would be $1,613. That's if you did everything exactly the way that I did. And yeah. And that's one contract, 2 hours per day. One contract, 2 hours per day. Now, can you live on that? Probably not. Depends where you live, but once you get up to 10 contracts, then that's $12,867. And that's with an $8 commission. Can you live on that? I don't see why not. All right. And that's it. Guys, with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, Dwayne's not ready yet. That's fine. He's probably making himself a coffee. And he was going to post a picture earlier. He was talking about the clouds in the sky. And he said he was going to take a picture of it. I don't know if he did. Okay. So right here, you see there's buying pressure right here at this level. But if we break through that, then we're good all the way down to here on the gold. Okay, so we've got to close down below that line right there to break through it. You see how the cycle is going down right here? And let's look at it on a larger time frame. Okay, you see on the larger time frame, the low of the day, there's nothing between where we are and the low of the day. So if we do manage to get down below that, yeah, Elvis left the desk. He's not in the building, Kevin. If we do manage to get down below that, then we could have a big move down on gold. So if we do get a trade set up on the short side, then that would be something to look forward to. Okay, challenging the low of the day, which is down here, 1463. Okay, the first thing I'd look for would be right here, though, 64.4. Hey, for once, the FedEx truck didn't stop at my house. But that's what I would be looking for. Here we go. Okay. Julian Leo. All right. Well, here on the ES, we went right back up to the weekly trading zone. Now, if we look at this on the 30-minute, it's right up at the BBC and a weekly trading zone. That's going to be hard to get through right there. Okay, that's going to be hard to get through. So, I mean, both gold on the 30-minute chart, both gold and ES look like they're going to go down, but only one of them is right. And it's just the way the market has been today. So let's see. On the crude, let's look at that on a larger time frame. Yeah. The crude just had a huge run today. A huge run. And right now, it's bullish down here in the slingshot. But I don't know. It's at the high of the day. I mean, of course, it can go up more, you know, as long as people are buying it. Now, this, I feel, if we look at this on a big picture, you know, it's going to go back a couple days. But here's a head, here's a shoulder, here was a little tiny shoulder, but it broke the neckline right there, and it dropped down. Here again, little tiny shoulder, broke the neckline, and it dropped. And right now, it's breaking the neckline on the way down. But that's on a 4-tick range. All right. So the ES is inside the weekly trading zone right now. So we're going to have to look for that to get out of there. Over here on the gold, we still haven't closed down below this level. We have dynamic support bringing right here, right now. And this is bearish separation in the slingshot right there. It's bearish separation. Okay. Dwayne, you're back.
I am back.
Okay.
Elvis is back at the desk.
Yes, he's back at the desk, back in the building. Did you ever take that picture from this morning? You said you were going to take.
Oh, no, because upstairs I could see it perfectly, but the screens on the windows hampered the picture. And then when I went down to ground level, I couldn't see it for the rooftops. So, no, I didn't.
Okay. I was just curious. I was looking forward to seeing it.
Yeah, no, it looked real pretty.
Okay.
Okay,
Now
here we
you
go.
can take the charts back.
All right. Okie doke. Recap of the recap.
Today it took 36 minutes and 4 trades to get to 132.50 per contract.
That's a good thing, go. All right. So let's do it this way. Recap just came in. Thank you, Valerie. So with Logic 247, that is our round-the-clock E-mini alert service. We are in week 68 since the launch. So far this week, up through 12:30 Eastern today, total of 46 alerts, 5 never triggered, 6 are still percolating, 35 actionable alerts. 2 of those have been stopped out. So we're at 6% of all logic alerts this week have been stopped out. On a weekly basis, over the last 68 weeks, we have averaged 20%. Okay. All right. Now, let's jump to Logic 247. Or I'm sorry, let's jump to the Concierge. Logic 247. Those alerts are based on current price behavior. The Concierge Trade Alerts are based on previous price behavior. When you have 2 figures pointing at the same important price, important area, it almost always deserves a second look. I'll give you an idea what I mean by that. Now, you've heard me say many times on this radio program that I endeavor to get the Concierge alerts out shortly after the Globex Open. Try to get them out by 9 p.m. Eastern. But I had mine on something else, and I got them out this morning at 9 a.m. Eastern. Okay. If you want to grab a screenshot, please feel free. 5, 4, 3, 2, 1. Okay. All right. When the guys told me this morning that I hadn't sent them out, I could clearly remember sending them, but I must have been dreaming, because I went and looked, and lo and behold, I hadn't. So let's drop down to a 30-minute chart. That would be this one. The zones that you see are the current weekly zones. Share them with the entire audience every Thursday. Partners and passport holders get the weekly zones every Monday morning, 6:15 a.m. Eastern. We've published the zones since December 14th of 2009, so we are coming up on our 10-year anniversary. The zones provide a framework for our traders. The alerts highlight the entry of a trade setup. The alerts, the logic alerts, have an interim target, but both logic and concierge share the same trade 2 target. Now the trade 2 target for logic and concierge, if it's a long trade, it's the zone overhead, and if it's a short trade, it's the zone below. We've had 3 attempts since yesterday to get to the zone below at 85.86. Here's the first attempt. Pulled back to the BBC. Second attempt. Now when this first one didn't make it, that created an obstacle. That's why the second one didn't make it. It couldn't get through the obstacle. When price can't get through an obstacle, it will turn and go the other way. When price can't get through a zone, it will turn and go the other way. So we had 1, 2 attempts to get to the zone below. Couldn't do it. Okay, so price goes back to the zone, consolidates right here. The narrative changes right there. Price was below the BBC. That's the green line. This stands for bull bear cross. When price is below, we anticipate lower prices. When price is above, we anticipate higher prices. Very simple. Simple by design. So on this candle at 2 a.m. this morning, 1 hour ahead of the London Open, price gets above, we get a bullish cross. Price actually crossed over about 12:30 Eastern. And then we consolidate it, as you can see, just right inside the zone there. Get our bullish cross. And off we go. And we, in one 30-minute candle at 5 a.m. Eastern this morning, we went from 31.05 to the zone overhead at 31.11. That's a 6-point move. At $50 per point, $300 per contract traded. Okay, that's zone to zone. Price could not get through the zone. So what does it do? Comes back to the zone below. And the BBC. Now when price approaches a zone from above, we expect it to be good support. When price approaches the BBC from above, we expect it to be good support. So this is good support times 2, sent us right back up to the zone overhead. When we approach a zone from below, we expect that to be good resistance, and it was, and that sent price right back down to the zone below. So we went from zone up to the zone, 6 points, back down 6 points, back up 6 points, back down 6 points. 24 points of travel there. Now, on this candle, the narrative changes again. We get below the BBC. We also get below the zone. When that happens, actually this candle right here, that's called the slice. Only 3 things happen at a weekly trading zone. Consolidation, that's the most likely, probably 70-75% of the time. Second most likely, rejection. Price runs up, touches a zone, or runs down and touches a zone. But by the time the 30-minute candle closes, the only thing touching the zone is some wick. Okay, that's rejection. Price was rejected by that zone. When price is rejected by a zone, it's going to go look for support, which it found at the BBC and the WTZ, sends it right back up to resistance, right back down to support. This time it doesn't hold, we move through. That's the slice. Okay, when price slices through a zone like it's not even there, okay, we expect price to then retrace back to the zone. In this case, it failed to be good support. So now we're checking to see, is it going to be good resistance? So it pulled right back up. Good resistance. Sent it back down to this area here that's highlighted. And as soon as that reconnecting thing goes away. Now, did I lose internet?
I
No,
got the same issue. I got the same issue, Dwayne.
Okay.
Yep.
So I'll show you guys what this rectangle's about and why we found support there. Now, when we find support and price can't get through support, it's going to turn around and go look for resistance, which it found, no surprise, at the BBC and the WTZ. That's how it works. Day in, day out, day after day after day after day. All right.
And it's not going to change.
I'm sorry? Oh, and it's not
going
going
to change.
No, it's not. It's been that way since the inception of the markets. Now,
I'm reconnected now. So you should be soon. Yeah,
I should come to life here. Come on. Okay. Last night, Concierge Trade Alert for the S&P, consider being long 31.15. This swing high right here, 31.14 half. Yeah, within 2 ticks of the trigger, price reversed. And the short side for the S&P, 31.02. That's right here. Important prices, important areas are almost always tested. Come on. There we go. Okay. All right. So, this swing low, which took place shortly after the London Open, I was in the 3:30 to 4 a.m. candle. The market ground to a halt. So, then no surprise that as price comes back down, everything I just explained to you, as price came back down and through the trigger, right? The trigger was 31.02. We expect this area to be good support. It was a cross between the support from here and here. Now, there's a dynamic you should be aware of. see this low here, 30.90.75. This low, 30.91.25. This low, 30.93.5. So here's what happened. Buyers who bought here had a nice run. Okay, they were willing to pay this price, and they were well rewarded for their effort. Okay. Now, as the forces that be drive price back down into this area, not only those who took this long, but those who missed this move, okay, they don't want to miss it again. If this was a good price to buy at, here, there's no reason it shouldn't be here. Buyers come in early, okay? So watch for that. Double bottoms, double tops. Watch for buyers or sellers on the reverse to come in just a little bit early, just to make sure they're not left at the station, left at the altar, okay? See, there's a low, higher low, and a higher low. In that line of thinking, if we come down again through the trigger, and I think we just might, we'll see. Then as price approaches this area, let's say you're in a short trade coming down, and maybe you've done something like this. Maybe you drew yourself a little line across there, and that becomes your target, right? That's reasonable. That's what I would do. But I would do this. I'm going to bump it up. That may be a point. Depends upon the current volatility and how much room I have to work with. Because if I'm short, just as these guys didn't want to miss their second and third entries, if I'm short, I don't want to miss my exit. So I'm going to bump it up a little bit. Entry, target. So from 31.02, the swing low was 30.93.5. Is that 9 points, Michael? That's not about right.
39.
8.5.
39.
Yeah.
I think so. I was looking at something else. I was reading something. I wasn't really listening.
8.5, 9 points. Okay.
Okay.
31.02. We'll just round that up. We'll call that 30.94. That makes it easy. 8 points. So it's an 8-point move, $50 per point. That's what the S&P pays. So this move from the entry to the swing low, $400 per contract traded. If you've earned the right to trade 10 contracts, just to pick a number, you're looking at a $4,000 move. I must caution you, do not go live until you've earned the right to go live. If you hang your hat with us, we want you to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. 10 days in a row. Once you accomplish that, the 2420 blueprint will give you the green light to go live with one contract, only one. We want you to stay with that one until you increase your account balance by $2,000. The cost to trade one S&P 500 E-mini contract during the day session, $500, but you need cushion, okay? So we want you to increase the account balance by $2,000 before you add a second contract. When you add that second contract, you'll be adding it with profit you earned in the market. If you haven't earned any profit, you won't be adding a second contract. In fact, the blueprint will send you back to SIM if you have 2 consecutive days in a row where you don't reach your goal in 10 trades or less. Now, the blueprint sending you back to SIM doesn't mean you're a failure, you're washed up or washed out or any of that. It just means something isn't quite right. Is it you or was it market conditions? That's why you go back to SIM, so we can find out. When that happens, and it's bound to, You'll book a mentoring session with myself or Michael or both of us. We'll get together in a go-to meeting room. You'll be able to see my charts. I can see your charts if you want me to see them. We're going to troubleshoot everything that happened during that period of time when you didn't reach your goal. We're going to determine, is it something you didn't understand about the methodology or the indicators? Or was it a case of the market just not being conducive for trading at that time? And that happens. Nice thing about our indicators is they not only help you with your entries and exits, they also help you stay out of a market that is not conducive to trading. You add the second contract with profit you earned in the market. Okay, that is the day for the happy dance. Okay, because you've achieved something that most traders will never achieve. 9 out of 10 new traders fail. Futures Magazine published this article 2005, 2006, just as I was learning how to trade futures, E-minis. Needless to say, I was a bit alarmed. You know, here I am embarking on a new career as a middle-aged man, and I'm reading this article that the chance of me succeeding at this is like, oh, slim to none. Everyone just accepted the article at face value because they knew it was true. Any broker could tell you. Ask the guy in the mail room at any broker, when they send out the 1099s at the end of the year, which stack's bigger? And he'll tell you. Okay, so Futures Magazine didn't tell us why 9 out of 10 fail. They were just stating the fact. So I decided that I couldn't just live with that. I wanted to know why. I mean, there's got to be a reason. It has to be a common thread. And I found it. It was really quite simple. It was staring at me the whole time. No teacher. Chances are, if the plumbing breaks in your house, you're going to call a plumber. Why? Because nobody ever taught you how to plumb. If you need to fly somewhere, you're probably going to buy a plane ticket for 2 reasons. One, you don't have a plane, but even if you did, nobody's taught you how to fly it. Brain surgery. Would you attempt that with just a bottle of whiskey, a sharp knife, and a YouTube video? I hope not. But yet, people step into the markets every day, new traders, and they think they're going to just figure it out. Because honestly, it does look pretty simple when you're looking at a historic chart. You're watching some guru walk you through the chart, just like I do here, right? Looks oh so simple. And you know what? Trading's not easy, but it can be simple if you allow it to be simple. If you rid yourself of all the congestion and confusion and the endless oscillators and indicators and theories and advanced declines and trends and trickses and all that jazz. You know, now I'm not knocking any of it. I'm sure it all does exactly what it was created to do. But most people, or quite a few, I talked with somebody about this in Telegram the other day in our discussion channel. I've seen people with 4 or 5 indicators on their chart. They look completely different. Maybe one's a line, the other one's some kind of an oscillator, the other one maybe prints something on the screen. One of them clucks like a chicken. Wow, man, I got 4 indicators and they're all telling me to go long. I'm going long. If you look under the hood, now this isn't always the case, but I've seen it too many times not to mention it. Yes, you have what appears to be 4 completely different indicators, but under the hood they're all measuring the same thing. So that doesn't really help, does it? It doesn't. Now, what Michael and I have done, we've kind of just cleared the deck. He and I, at one point, pretty sure we owned every indicator and oscillator that had ever been created, including the ones we created ourselves. And we were always just one mouse click away from greatness. The problem was we were always one mouse click away from greatness. And every day, it was so clear that we just needed that one more filter, that one more thing that would put us over the top. Thank God we realized that no matter how many filters and indicators and oscillators and whatnots, we were always going to be one mouse click away from greatness. So we did something that was very painful. We shed all of that stuff, just cleared the deck. We took a look at price. It's been a long time since we'd seen price because we had so many indicators and oscillators. The indicator set that we put together has one job. No trend, no tricks, no advanced decline. I'm not knocking those things. Sure, they do what they were created to do. Our indicator set, fluid across, our methodology and indicators are fluid across all markets, all time frames. When I unleash the indicators on a market, any time frame, its job is to go in there, find the underlying rhythm of that market in that time frame, and highlight it for me. I'll show you in just a second. That's what it does. Any market, any time. Is that John here in the background?
No, I didn't open his mic. Nope, he's not.
Oh, Dr. Tom, what? Hang on for me a minute.
It's Dr. Tom. Yeah. Sure.
Okay.
Yeah, John's not there.
Yeah, that's fine. He'll probably come late today. He knows it's Dr. Tom Day.
Okay.
So again, the indicators have one job. That's to find the underlying rhythm of that market in that time frame and then highlight it so that I'm able to take a high probability, low risk trade. Now let me show you what that looks like. Then we're going to talk to Dr. Tom, and after we talk to Dr. Tom and John, if he pops in later, we'll come back and recap all of the Concierge Trade Alerts from last night and all of the Logic 247 alerts for this week. Okay. Here we have the bearish cross, lower prices, we're below the BBC. We find support, sends us back to resistance. Now, this pullback, this is key. It holds more often than it doesn't. So when it holds right there, as it did, I'm now able to get short the market with a minimum amount of risk. When price is below that green line, I'm only thinking about short trades. When it's above, I'm only thinking about long trades. Now, I know this sounds, incredibly elementary, but it is. It's simple by design. Remember, we had all the fancy stuff, but it never did the job quite as well as the simple stuff that we use today. If I'm getting short coming out of here, my risk is minimal, but my potential is the zone below. A little unusual here in that we made 1, 2, 3 attempts so far to get to the zone below, haven't been able to do it. Now coming down, we're only thinking short trades. Once the retracement kicks in, I'm not going long here because we're below and I expect lower prices. This is where patience and discipline comes in. You're going to wait for it, and then take action, okay? And that's where a lot of traders have difficulty fine-tuning their patience and discipline. So it sends us back down to support, which sends us back to resistance. Okay? That's what the indicators do. The zones give you the framework for the entire week. The indicators create the framework for you in a very fluid manner, in the moment, dynamically, as it happens. So right here on this candle, confirmed by this cross, okay, the narrative changes from bullish to bearish. And you can see right here. This bearish cross here took us down to support, back up to resistance, back down to support, back up to resistance, and then we drop to the zone support, back up. Okay. Walk with me, okay. First failed attempt, second, but we don't consider a failure.
Dwayne?
Yes. Yes. Yes, Tom.
Dwayne, can you hear me?
I can, Tom.
Yep. There's a bunch of announcements playing and I can't hear you. I just thought you want to know.
Well, we're not playing them. You've got two windows open.
Yeah, because I'm not hearing any announcements on my end.
You've got two windows open, Dr. Tom. So just take a moment and find the open window and just shut her down. Okay.
Okay. Sorry about that.
No. I'm glad you brought it up. I don't want you to be.
Didn't know if you were hearing the same thing I was hearing.
No. All right, guys.
Okay. Sorry.
Did you find it?
Yeah, I was actually on your website and it just started playing all these announcements and stuff, and I thought it was coming through you, but it was covering you up.
Yeah. Okay. All right.
Anyway, we're good. Sorry about that.
Okay. No problem. Okay, guys. So at 3 attempts to get to the zone below, hasn't happened. That's okay, because we always know what price is trying to do. We knew price was trying to get to the zone below, here. When it's unable to, we know what that looks like. We know how to handle that. We know how to trade that. Okay, this is where the narrative changed from bearish to bullish. You see what happened. And then right here on this candle, narrative changed. You see what happened. And right now, the narrative is changing again. Okay. Not only are along with the indicators and the methodology being fluid across all markets and time frames, you as a trader, you must learn to be fluid as well. How many times have I heard someone tell me or say to me in a mentoring session or wherever in a workshop, oh man, I'm going to bet the farm. I'm going short because I know price can't go any higher. The market can stay liquid far longer than you and I can. Okay, so the narrative just changed. Okay? We had a leg, we had a retracement. Now this pullback holds more often than it doesn't on this chart. This is an example of when it doesn't. So let me give you a radio freebie here, and then we're going to go to Dr. Tom. We're going to talk about investment grade gold. And when Dr. Tom and I are finished talking, I'm going to do the complete recap of every Concierge Trade Alert from last night and every Logic 247. We want to consider being long here, 3107 to 3109 to 3111. Okay, I'll write it down. Now all we got to do is be patient. Let it trigger at 3109. That's not to get out of the trade. It's simply to make sure you're aware of your surroundings. Okay, you got a nice 2-point trade. If you're just starting out, you're on one contract, $100. If you've earned the right to trade 10 contracts, it's $1,000. Okay, but wait for it. But wait, there's more. Still another 2 points to go to get to the zone. Okay, the closer you get to the zone, the higher the probability that you're actually going to get there. But remember, zones are an area, and so sometimes you might come up a tick or two short. Okay? All right, let me cut it off right there. Dr. Tom, welcome to the show.
Hey, thank you, Dwayne. How you doing today?
Very good, very, very good. Glad to have you with us. Let me send the charts or the screens over to you.
No need for today, okay?
Oh, you don't need them today? Okay, good.
No. No, I got something better in mind.
Did you find the conversation we had earlier today? Did you find what you were looking for?
No, I was going to suggest to you that all of those things that you post, that you put the dates on them and put the date first, so they'll sort in date order. Then people can find a particular one. But
Well,
I checked a whole bunch of them.
they are in order.
Right. I just couldn't find the particular day, but it doesn't really matter because I got something that I think you'll enjoy.
Yeah. What's that?
Because you like to talk as much as I do.
Sure.
But before I get started, I just want to say I got on a little early, and I was listening to you describing what you're talking about before I showed up.
Yes, sir.
And I found it very inspiring. You're getting me excited about getting on your program.
Well, that's very kind of you to say. You're
Yeah,
a gentleman and a scholar.
you're inspirational. Now, what I thought we might do today is, you know a lot about investment grade gold. I know you own gold, but usually I just talk about different aspects of it. And I thought it would be fun and interesting for your audience to actually interact as if you were a potential client and you called me up at Golden Heart and you were interested in buying bullion.
Mm-hmm.
And then just, what do they call it, role play.
Mm-hmm.
And I could take you through the process.
This is not going to get kinky, is it? Okay.
No. No weird costumes, nothing like that.
Oh, that's when Diamond and Silk were on the show right there. Did you catch that show right there? Oh, you were here? Were
I
you
did
here?
not.
Oh, you weren't here? Okay. You should
No,
have.
I wasn't even in town.
It's time to have him back. I told him we'd have him on about once a month. So
Yeah,
I'll send him out
they're
an
fun
invite.
ladies.
Yeah, they are.
But are you okay with that? Just
Yeah,
give
sure.
me a
You
telephone
bet.
call and
Yeah, Mike's here too. Mike, you want to play?
I'm here.
Okay.
okay. Well, you could be Dwayne's wife.
Now, what would be? What
Usually
is
it's
it?
husband and wife.
What is it that has possessed me to call you? Did I watch a webinar? Did I receive something in the mail?
All right. Here's the scenario. You're Dwayne.
Uh-huh.
Mike is your
Mm-hmm.
brother,
Mm-hmm.
and you've been watching the news. You see the national debt rising higher and higher and higher.
Uh-huh.
This is how I got involved. I was looking at the election, Obama's first election, and it was pretty obvious to me he was going to get the presidency. McCain was running a kind of a tired campaign, and everything was headed in that direction. So I called up my friend Greg, who you know, and I said, "Where can I buy some bullion in Palm Beach County, from an honest gold dealer and get a good price?" And then he proceeded to tell me that there was a better way. So why don't we just start there? Why don't you and Mike give me a call? Ring, ring. Hello, this is Dr. Barrett.
Hey, Dr. Tom Barrett. I've been seeing all these commercials on TV saying I should invest in gold or silver, and I'm kind of interested. What can you tell me, and why should I take my money out of the bank and put it in gold? And if I do that, I don't know what to buy. How do I even know if I'm getting real gold? Where do I keep it? And how much? Or how much does it cost?
I mean, is it?
I want
is
to
it
get some gold.
100%
How much does it
gold?
cost? Yeah, right. Yeah.
Okay, that's a lot of questions.
Sure.
Let's start with the first one. How do you get involved? When I first started getting interested in this, I called a friend who had heard on a webinar recommending gold. And from the time that he was on that webinar till I think about 2.5 years later, the coins that he had recommended had gone up almost double. So when I saw that Obama was going to get elected, I figured, okay, the national debt's going to go up. It was at that time it was at $10 trillion, and I was right. By the time he left office, it was 20 trillion. So
what is it
that
today?
scared me.
What is it today?
It's over 22 trillion. So I knew that as the national debt goes up, the dollar goes down, and as the dollar goes down, gold goes up. I knew that much because I had a lot of experience as a financial planner and stockbroker. But Greg, he's not rude, but he's just real matter of fact. He said, Tom, you weren't listening. I said, yeah, no, I know. I remember you told me about these certain on the webinar. You said certain coins and what it would cost now, and I know they're double, and so I want to get in on this. And he said, Tom, you weren't listening. I wasn't talking about bullion gold. Bullion is only up about 7% right now. The coins I was talking about are some of them more than double. I said, okay, you got my attention. Talk to me. So he explained the difference between bullion gold and investment grade gold. The main difference is that one is not an investment and the other is. I'd always thought of bullion as being an investment.
I think most folks do, or would consider it to be. Why do you not consider it to be an investment?
Well, partly because of study and partly because of experience. When I was young, I bought about $250,000 worth of gold at $200 an ounce.
Okay.
And a couple of decades later, I'm really happy.
You didn't carry that home, did you?
No, $250,000 worth of gold, even at $200 an ounce, that's still a lot of ounces. But in 1980, I saw gold going up and up and up just like crazy. And I started getting a little freaked out, and I sold at 800. So I made 4 times my money. That's a good return, right?
Yes, it is.
And so I sold at 800. Gold pulled back and then eventually started its upward track again. And for the first time in my life, I could say I'm a millionaire.
Right.
The only problem was, and I didn't realize this till years later, when I retired from the brokerage business and I started studying inflation, because one of the reasons I retired young, I was in my 50s when I retired from the brokerage business, is because I realized it was a scam. We were telling people that their bond portfolio, they're making 3% a year, but in reality, inflation
I won't ask you to say the name of the brokerage firm. I mean, you can if you want, but you don't have to. But I want people to understand that the comment you just made, it's not like you were working for some bucket shop or the Wolf of Wall Street. What was that crazy guy's name? But you were working for a legitimate, upstanding, they got commercials on TV kind of firm.
One of the biggest in the world.
There you go.
And the reason I won't mention their name is because I don't want to get sued.
Sure, absolutely.
But the same can be said about any brokerage firm, because the example I just gave, we would send clients a statement saying they made 3% on their bond fund. And indeed, in dollars, they did. But if we adjusted for inflation, which averages around 5% over the last 3 decades, they actually lost 2%. And it's the same way with CDs, even with their stock portfolios. If they made 7% on their stocks, after you adjusted for inflation, they made 2%. And then the government takes their cut, about a third, out of the whole 7%.
Right.
So that means another 2% gone. So really, again, they made nothing. After because inflation is a tax as well. They don't call it that. People don't realize it. But if the government takes money away from you for any reason, under any guise, under any terminology, it's a tax, isn't it?
Yeah, in essence, yeah. I agree.
Yeah, they're decreasing my purchasing power. So that's why I was interested in, I had money and I wanted to keep the value of it. And when I found out that the $1 million would only buy me the same amount of stuff as the $250,000 would have bought me decades prior, I realized I'd had this money tied up in there all this time and it made nothing. Now I had protected my money. I still had the same purchasing power, but you know about the principle of opportunity cost, right? And here I had.
Maybe you need to flesh that out.
Okay, well, if I've got money in one thing and I could put it in something else that makes more money, I've lost an opportunity. Okay.
Okay.
So that's the opportunity cost of an investment. In this case, I broke even, so that's even worse. It's not that there was another investment that was better. It was that this wasn't even an investment, although it's by and large considered to be an investment. But if people will take the time to go online and study inflation, they'll see that, for the last 3,000 years, an ounce of gold is about the same amount of anything you could name. Food, clothing, labor, whatever.
A house.
So, a house, yeah. A radio station.
Maybe you should do the house example. I know you've got a lot of examples, but for those who might not have heard it before, a house back then and a house today, the price of houses have changed and the price of gold has changed. Connect the dots.
Right. Okay. 100 years ago, you could buy the typical house in the United States, 3-2, for about $4,000.
Okay.
I actually found an old Sears catalog online, and they were selling a kit house.
Was it a Jim Walter home?
I think it might have been, yeah.
That was one of those. Yeah, I think so. Okay.
It had all the 2x4s, the drywall, the doors, the windows, everything for $2,500 delivered to your lot. Okay. The lot would have cost you about $500 then. Same lot would be
more.
Tens and tens of thousands of dollars today. And you would have hired a carpenter to put it together for you.
Okay.
And he would have brought in the subs and paid them out of his $1,000. Carpenters generally acted like general contractors back then. So for a total of $4,000, you'd have a brand new 3-bedroom, 2-bath house with all the modern appliances at that time. Everything was modern then. Today, that same house, which performs the same function, which is keeping the rain off your head,
right,
and the walls keeping the dirt from blowing off the street into your living room, is worth 60 times as much. But it's not really worth 60 times as much. It costs 60 times as much because of one simple thing. The dollar has lost so much value. Since we went off the gold standard, the dollar has lost 96% of its value. So it's worth 4 cents today in purchasing power, comparative purchasing power. So
now the value of the home is the same because a home is simply a place where you create memories.
I like that. Yeah. A home is someplace where you create memories. So the value of the home is still the same. It gives you a place to eat and sleep and have family Thanksgiving, Christmases, and so on, and make memories and raise your family. And so that value hadn't changed in 100 years.
Right.
But it costs 60 times as much.
Okay.
But the interesting thing is the gold is pretty much the same. The house has gone up to around $250,000. 100 years later, the gold had gone up to about $250,000 from $20 an ounce, or 200 ounces of gold to buy the house, from $4,000 to $250,000. So that tells me that hard assets retain their value And that's good. It's not a bad thing, really. But it's just not an investment. It's good that it protects me, but I want in my investments to do more than be an insurance policy. I want them to increase my purchasing power.
Correct.
So if you put that same $4,000 into stocks, it grew in 100 years to 83,500. So way less than hard assets. And if you put it into investment grade coins, it grew to almost $2 million, or 8 times as much as the bullion or the real estate did. So, quick story, I had a guy call me in early 2013, and he's like you, Mr. Reeves. He was referred to me by a client, and he called up to buy $250,000 worth of American Eagles. He's very specific. He wanted to buy the American coins. And I said to him, I said, no, you don't really want that. And he says to me, what are you, a smart aleck? How do you know what I want? I just met you, we've been on the phone for 5 minutes, and you're telling me what I want. I said, no, I'm not a smart aleck. I just happen to know a bit about some things that you don't know about. And he says, for instance. So I told him a little about what we're talking about, and he asked me to send him some information. I sent him the Gold Education Starter Package, and the next day at 11 o'clock, he was a quick study, he called me up and he told me he had a legal pad with 3 pages of questions. I said, okay. So I answered all his questions, and one of the things he had read was the 10-10-10 Financial Survival Plan, which gives you a asset allocation plan for precious metals. How much you should have in investment grade gold and how much you should have in bullion. And he said, okay, he says, I like this. I'm going to wire you the $250,000. I want you to buy me 90% in investment grade gold and put the other 10% into the bullion. Now, why did I feel so strongly that gold was going to go down? Well, from 2000 to 2012, gold went up every year. But in 2012, it barely made a profit. I think it was up 2%, maybe, something like that. And so to me, 2% is the same as break even. So it was pretty obvious, nothing goes up forever, that gold was going to have a pullback. I didn't know how much. It ended up being, I think, 32% that year in 2013, and silver went down 49%. So I gave him good advice. He calls me up after a year, and he says, Tom, I want to thank you because I lost $7,500 on that bullion I bought from you. Well, I started chuckling because I knew what was coming next, right? If he had bought $250,000 worth of American Eagles, he would have lost not $7,500, but $75,000. So he was happy as a pig in slop, as they say in North Carolina. And in fact, even though the gold bullion had gone down, and when it does, rare coins don't go up as much, but they always go up, especially the higher condition, higher rarity coins. And so as a result, he made enough money, profit on his investment grade gold to cover his losses on the bullion and still be ahead of the game. So since then, he's bought several $1 million more of investment grade coins. Mm-hmm. So does that make sense to you? Do you see the difference there?
Absolutely.
Now, I heard your brother say, is it pure gold?
Okay.
When we first got on the telephone together. The kind of coins that you want to buy are not pure gold. Now, that probably sounds counterintuitive, but bullion coins are pure gold. They're either 0.999 fine, as they call it, so 999 parts out of 1,000, or 4 nines, and some countries make it 995. So it's as pure as you can get gold. And that's fine if you're just going to put it in your safe and lock it away and don't handle it. But the coins that were made to be circulated, they found out really quick that if you made them out of pure gold, they would wear down very quickly. The beautiful designs on them would just flatten out just from normal wear, from passing hand to hand. If you carried a bunch of gold coins in your pocket, they knock against each other and nick and scratch the surface, and the rims would get dented. So different countries have done different things, but on average, most coins made for circulation are 93% gold. Sometimes they're 95%, but close enough. And the rest is usually copper. Sometimes they'll make an alloy of copper and gold, or sometimes they'll use silver, or sometimes all three metals. But the most common is 93.5% gold, and the balance in copper. And that stiffens it, makes it, the coin doesn't bend, it doesn't get scratched as easily, and so on. So fortunately for us, coins made for circulation were made that way because the ones that didn't get beat up along the way are much more valuable. The better shape they're in, the more they're worth. So we're buying investment grade gold coins today at really just remarkable prices, 10 cents on the dollar for European coins, for instance, as opposed to U.S. coins. Are you guys familiar with the principle of arbitrage?
Arbitrage.
Yes.
Yeah.
Okay. So the way it works in stocks is, let's say I buy a stock for $32.50 on the American Stock Exchange, and I see I can sell it for $32.55 on the New York. Now that's only a nickel, but if I bought a whole lot of stock, I can make thousands of dollars on just a real quick trade. So that's a form of arbitrage. Or this is a form of arbitrage. It's not the same kind. You don't buy it and seconds later sell it. But the way we're arbitraging is we've watched the progress of the U.S. coin market. The rare coins, U.S. rare coins, in the last 40 years have gone up hundreds and some of them thousands of percent. So that coins that 40 years ago sold for the same price, let's say you had a coin from France and a coin from the United Kingdom and a coin from Spain, and they're all the same size, same weight, same rarity, same condition as the US $20 coin. So the numbers are all 1 ounce coins. 40 years ago, they sold for the same price. Today, the US coin has gone up 10 times as much as the European coins.
That's interesting.
Yeah.
But
this is where you say why, you know.
yeah, why? Why has it gone up so much compared to the European coins? I'm guessing it was because I'm just going to guess here, because the dollar is what I'm guessing. It's got something to do with the dollar.
Okay.
I'm sure you're going to tell me.
Yes, I will be more than happy to tell you. What is the United States really, really good at? We're good at marketing. You know, we can sell anything.
Yeah.
And some smart people got together 40 years ago. My friend who does all the buying of our gold coins actually moved to Europe because that's where the bargains are. And he was involved in the starting of the two major grading companies that grade 95% of all the coins in the world. So it was U.S. ingenuity. We had a situation where, let's just pretend that I'm at a coin show, and Michael, you offer me a U.S. $20 coin, and you say, look at this really fine uncirculated coin. So uncirculated means it doesn't have any marks on it, no wear visible.
Right.
You'd have to have a microscope to find anything wrong with it. And I look at it, I say, you know, It's a nice looking coin, but it doesn't look uncirculated. So you say, well, let's go over to Dwayne. He's an expert coin grader, and we'll pay him $20 and ask him to grade it. So we each give him $10. He grades a coin. He says, yeah, boy, Michael's right. It is uncirculated. So I buy it from you based on Dwayne's assertion that it is uncirculated. And then later on, I find out it's not uncirculated and I've been ripped off. Well, I also find out that Dwayne is your brother and you forgot to reveal that little fact to me. Right?
Yeah, Dwayne and I are in cahoots.
So that actually happened numerous times at coin shows. And so 33 of the top dealers in gold coin in the world got together and they worked for a week putting together a grading system that eventually ended up being the professional coin grading service. And it was independent third parties that were grading the coins, not somebody's brother or brother-in-law.
Right.
And they're actually graded by at least 3 different people, and they don't exchange opinions. They strip off all identifying information. So like if I sent a coin in to be graded with my name on it and my cousin had to be one of the graders, maybe if he sees my name, he's going to grade it higher. So they take all that off, they assign it a number, and they pass it around in a bin to at least 3 different graders who don't talk with each other, and they enter their grades into the computer. Back then it wasn't a computers, of course, when they first started, but that's the way it's done today. And then if all 3 agree on the grade, a finisher checks out their work and puts the grade on it. And now you have totally unbiased grading. If there's a difference between the 3 graders, then you have a much more experienced grader that will look at them and make the final determination. So it's a very fair system. And I bought coins from $2,000 to $250,000 sight unseen because they're graded by these 2 major grading companies. So we could call it the modernization of the American grading system and say that's the reason why the coins have gone up so much. But I call it marketing. It was very slick marketing. A great idea. It gives people confidence that what they're buying is real. Number 1, that it's an authentic coin. They certify that. Number 2, that its grade is correct. And number 3, that the alloy is what it's supposed to be for that period. So the U.S. coin market has just been on a tear for the last 40 years. But you guys told me you're chart guys, right?
Yeah.
You look at charts a lot. When you see a chart where it goes up and up and up and up, and then it starts to roll over, and it's kind of going sideways, but maybe slightly up, what do you think?
Well, it's possible you're at a top.
Yeah, you probably lost the big opportunity. Well, that's what's happened if you look at the U.S. coin market as a whole. And that's why 6 or 7 years ago, we stopped buying U.S. coins and we only buy European coins because modernization is just starting over there. Both the 2 big U.S. companies, the Professional Coin Grading Service and the Numismatic Guarantee Corporation, have opened offices in Europe, and they're just starting to grade coins. Most coins are still graded by hand over there. So when my buyer goes to the coin shows, he sees things that would horrify him over here. In the U.S., 99% of all coins are in slabs. In other words, once the graders have graded the coin, they put them in this, it's not bulletproof, but tamper-proof is the word I'm looking for, container. So if you even tried to
bang against anything.
Yeah, it protects the coin, and if somebody tries to open that slab up and substitute an inferior quality coin, they can't do it because as soon as you try to open it up, it cracks and creases all over. So it's tamper evident. So he goes over to Europe and he sees tables full of coins that are just raw, just sitting there, and people are picking them up and handling them, and that just doesn't happen in the United States. Well, it's starting to take hold over there, and somewhere, depending on the coin show, between 2 and 5% of the coins are now being graded. So when they reach critical mass, that happened in the United States here when about half of the coins are graded. And when that reaches critical mass in Europe, and Jacques in France and Heinrich in Germany realize that they can make 10 or 15% more on their coins if they're graded, then everybody's going to spend the $29 and get the coins graded. And then you will see the US coin market catch up to the European market. But we're far from that. I think we got another good, at least a year, maybe 2 years, where we can buy these coins as an arbitrage opportunity at 10 cents on the dollar. It's not pure arbitrage, because I can't go to Europe and buy it for 10 cents on the dollar and bring it to the United States and sell it for 10 times as much. That's not the idea. But once the majority of European coins are graded, they will catch up to US coins in price. So that's why almost every wealthy family in the United States owns rare coins. People who have wealth, and even people who aren't wealthy but are smart, diversify. That's a biblical principle. It comes from the book of Ecclesiastes, chapter 11, verses 1 and 2, where it basically says, don't put all your eggs in one basket. So smart people don't put all their money in anything. Even if they're the best real estate flipper in the world, they don't put all their money in that. If they're the best Forex trader, they don't put all their money in Forex. And particularly traders. I get a lot of phone calls from guys like you who trade and make a lot of money doing so. But you're aware of the risks. And so most traders want to take some of their profits off the table and put it in something that, you'll never make as much money on gold as you do doing your E-mini trading. But the risk is a lot less. So it makes sense to pull some of their profits off the table and put it in something that's steady and dependable and that hasn't had a down year in the last 100 years. Would you agree with that?
Yeah, no, it's definitely good to diversify and have multiple streams of income or multiple streams of assets. Yeah, I totally agree with that.
So I've been talking a lot. What questions do you all have?
Well, Dwayne stepped away for a minute, but
okay.
If you buy gold bars, this is just a question that I have personally. If you buy gold bars, are they 100% pure?
These days they are. Yes.
Okay. That was just something I was curious about, because I know my son's birthday, I bought him silver bars, not gold bars, but I bought him one bar for every year he was alive, and and I was just curious if that, I mean, it was silver, not gold, but I was just curious if that was 100% pure.
Yeah, if you go and look at it, you'll see somewhere stamped on it, there'll be what's called the hallmark, whoever created that bar. It used to be governments, now it's mostly private companies. And you'll also see the weight in ounces, and you'll also see 0.999 or 0.9999. Funny story about silver bars. I have a friend up in Canada who has a whole lot of silver bars, and he didn't want to have to buy a safe big enough to put them all in. So he made planters out of his silver bars, and built little walls out of them and put dirt in them and planted plants, and he spray painted them brown. And so people walk by it all the time, and they're walking by thousands and thousands of dollars worth of silver, and they have no clue.
That's funny. That's
Yeah.
good.
He even uses a silver bar for a doorstop. A little harder to do that with gold, though. I wouldn't recommend it.
Yeah, gold's
But
a little harder to do it with.
Gold, if you wanted to buy a silver bar or a bar of gold today, they're pretty big, and it would cost you tens of thousands of dollars. So there are actually different types of bars. Mostly I bought kilo bars, which is 32.15 troy ounces. And yeah, it'd be about slightly over 2 pounds. So I went and bought 10 of them from a wholesaler, put them in my briefcase, and that briefcase got very heavy carrying it home. So would you guys like to get started at least, get a, yeah, I don't, by the way, you notice I didn't ask you if you wanted to buy some gold or if you wanted to invest in gold. I look at it more as protecting your assets. So do you have some assets that are basically sitting there molding, not making you any money, that you would like to have in something that's going to make you some serious money with a serious degree of safety? Well, that that's actually a very good question, because obviously I have to eat, and you've met me in person before. You know that I haven't missed too many meals. Yeah. So the way most gold dealers do, they'll add like a 10% commission on top of whatever they pay for the gold. But most of them are sitting in shops in the United States and buying it long distance. And so they're paying too much, because we have our buyer, and he has about 15 guys that are bird dogs for him, looking out for the great coins. We are able to buy considerably below the market. So
are you buying mostly from like estate sales, that kind of thing?
It's a variety.
Okay.
Private sales, auctions, sometimes from other dealers, and so on. But because Greg has so much experience, like I say, he was one of the first graders for PCGS. He was one of the original owners of NGC. So he has years and years and years, 40 plus years experience grading coins. We like to buy coins raw, unslabbed. And it's very hard to do in the United States because 99% of them are slabbed. So he'll look at a coin and he'll say, well, this is going to grade as a mint state 63. Mint state means uncirculated. And the person selling it to him is offering it to him at such and such a price, and he thinks it's an MS 60. Well, Greg doesn't do anything dishonest. He's not going to try to fool the guy or anything like that. But if the guy thinks it's worth less, he's not going to educate him, right? Would you? He gives the guy his asking price, which is usually enough below the market price. Right? I don't think so either. I happen to be. I'm not an expert like Greg is in gold coins, but I am an expert in guitars. And I was at school bazaar one time, and I picked up this guitar, which was all spray painted black, and I could tell by the weight I had something there. And so I asked if I could take it over under a brighter light, and I could see under the black spray paint the words Martin on the headstock. I was holding a Martin guitar, the best handmade guitar in the United States. So I took yeah. Well, I took it back to the lady at the table, and I said, "How much for this?" And she says, $10. And I said, "What?" And she says, "Oh, if you think that's too much, I'll let you have it for $5." I said, "No, $10 is perfectly fine," you know. And I took it, had it stripped down, and refinished, and sold it for $2,000. I had no moral problem with that whatsoever. It had been given to the school by someone who didn't know what it was worth. The school had no cost in it, and they gave it to me for $10. Right, because it was given. Then I would have told her honestly what I thought it was worth. But I knew it was worth at least hundreds of dollars. I didn't know what it was going to look like once you stripped it down. But the point of all that, because sometimes I go off on rabbit trails, is the point of that is that Greg is able to buy the coins below the market, and therefore we can sell them at the market, and we don't have to add commission on. And that's the benefit to you and Mike, that instead of you having to spend the money to fly to Europe and pay for their expensive hotels and go around to coin shows and try to find something that's a good deal, and also have to educate yourself on whether a certain kind of coin is really rare or just old. All those things factor in. You would pay the same amount of money as I would sell it to you for, but then you'd have all those other expenses on top. So that's the way we make our money, because whenever anybody tells me, well, I'm not making any money on this, I say, well, I don't want to do business with you. First of all, because he's a liar. But second, if he's not making any money on it, he's not going to be in business very long. And I like to do business with people who are going to be in business. So Greg's been doing this 40 years. I've been working with him for 12 or 13 years. And we've made a lot of people a lot of money. So are you guys interested in looking into protecting some of your assets? And if so, how can I help you? Well, right now, we're really liking the 5-pound coins, the ones made since 1980. Now, over the years, we sold a lot of
What do you carry? Do you have to carry that in a wagon?
Coins, but people are starting to realize the value on those, and people are totally ignorant of the fact of the 5-pound coin. Elizabeth II was crowned in 1953, and they made an initial batch of coins with her image on them. Today, you can't buy any of those coins for less than $1 million. But they're making the same exact coin since 1980, and they're very limited in the number they're making. This is smart. When the U.S. makes coins, we make 1 million of them. Figure if you're going to make the die, let's crank out 1 million coins. The British Parliament has limited the Royal Mint to making no more than 7,500. That's a huge, huge difference. And it's huge because anything that's 5,000 or less known to exist is considered rare. So we only buy coins that are less than 3,000. And a lot of the coins we bought are less than 1,000. We bought some the other day that were 188 created. That's all they made.
Wow.
So these coins that we buy are rare the day they're born.
And those were
So you don't necessarily have to buy old things to get rare things. And some of these 5 pound
Were those
coins
hand hammered, Tom?
No, these are machine made.
But they only made 188. I mean, is it worth creating the machine to only make 188 coins? I don't really know how the process works.
Well, they use the same machine for all the coins.
Okay, all right.
It's just different dies.
Okay, gotcha. All right.
And frankly, they probably didn't make much of anything on those because they only sell them a little bit above the spot price of gold, just a matter of a few $100s over spot. And so that's why they're such good bargains. You know, we bought some sets that originally they produced them at $10,000. These were sets where they only made 100. It's a 5-coin set. And today they're selling for $35,000. So if you were to ask me, like you just did, what's the best deal going today, that would be either an individual modern 5 pound coin or a set of those coins, because
well, that brings up another question. Can you buy just one coin, or do you have to buy them like multiples in a roll or a set?
No, you can buy, and anything we sell, by the way, is graded. We don't want you to have to depend on our grade, since we're selling it to you. We don't want you to have to depend on our estimation that it's a MS65. So we get them graded by one of the independent grading services. And yes, you can buy a nice, beautiful, rare 5 pound coin. And by the way, the 5 pounds is actually an ounce on a third coin, not 1 ounce like the US and Canadian and South African coins.
Okay.
And you can get them for as little as $2,500. So that's a great way to get started.
One of the 180, Tom, of the 188 coins made, you can buy one for a couple grand?
No, you can't buy that one.
Oh, okay. I'm sorry. All right.
I wish.
Okay. Oh, okay.
I would buy every one I could find, but that one's going to be about $10,000. There's another they only made 388. That's about $8,000. But I'm talking about the ones that are 3,000 or less, in high grades, very good condition. Almost all would be improved condition, which is the highest.
And they'll be in that little, what do you call it? I know you said it earlier.
The slab.
Slab, there you
go. It's like a ballistic plastic container.
Yeah, I'm familiar with them. And so when you sell a coin, you always sell it in those, right? But when you buy them, they're probably not in them in some cases.
Right.
Okay.
That's how we make our money. We buy them below the market because we know how they're going to grade. And then once we get them slabbed, we can sell them at the market price and still make we don't make a big profit, but because we sell so many, it adds up.
You make up for it in volume.
Yeah.
Okay, that makes sense.
If you read through the Gold Education Starter Package, you'll find out, a little bit about the history of how coins are made and why buying certain types of coins are a much better bargain. But as far as a hammered coin, you mentioned that, those are handmade coins. They haven't done that for 349 years.
Okay.
So I do love those coins. They're beautiful. But I can actually make more money as an investor on the investor grade modern 5 pounds. So that's our number one pick these days.
Now, how do we do this deal? Do I have to send you the money first? And if I do, how do I know that when FedEx comes, I'm assuming you use FedEx, when FedEx comes, how do I know I'm not going to open it up and have a box of rocks?
Okay, well, 2 good questions. Yes, you do send us the money, and then we send you the product, just like in any retail operation.
Because
We
I'm
don't
assuming
use-
that some people, Tom, that who become your clients when you first meet them, they don't know you, you don't know them. So there has to be an element of trust here.
Yeah, and I've had clients that started off for them small, $25,000 or $50,000, and ultimately bought millions of dollars worth of coins. I've had other
Okay.
people start off for $2,500, and eventually they bought $20,000 worth of coins. So nobody ever blows their whole stash, so to speak, initially. We do not ship by FedEx because it's not safe.
Okay.
Our insurance company
really?
doesn't allow it. Oh yeah. How many times have you walked by a FedEx truck with the back door standing open
Oh, that's
and the
true.
guy's running in to deliver the package?
Yeah. Well, it's the same with UPS.
Yeah, same with UPS, same with DHL. So the only way really rare coins and also diamonds, high-end jewelry is shipped in this country is by U.S. Postal Service registered mail. Now, I don't trust the post office to deliver a postcard and normal things. I mean, there's so much lost mail with the Postal Service. They're so inefficient. But think of registered mail as a SEAL team as opposed to a company of swabbies walking along in their little funny looking hats in the Navy. You wouldn't send those guys in to rescue a hostage or something in Afghanistan.
We call those
but-
Dixie cups.
Dixie cups, okay. Being a Marine, I have different words I use for Navy people, but I won't.
Yeah. So what kind of hat did you put on your jar head?
I put one on that fit a jar.
Okay. All right.
But yeah, the registered mail is under lock and key every step of the way. Has to be signed for every step of the way. If it's in an airplane, it's in a safe. If it's in a truck, it's in a safe. When it's delivered to your post office, it's locked up in a safe until a special driver delivers it personally to you, and you have to sign for it. So it's the safest way to ship really valuable things.
Okay.
So what I would suggest you do is read the Gold Education Starter Package, gentlemen, and then get back to me and let me know how much money you want to protect. And we'll build your portfolio just like I did when I was a stockbroker. You know, people would send me money and I would ask them, what do you want to buy? They said, well, I don't know anything about stocks. You tell me. So we do have some clients who know a lot about coins and they'll tell us specifically what they want. And others that just say, you know, here's $100,000, build me a portfolio, or here's $10,000. What would you recommend? You know, so that's the next step. We don't want you to buy anything based on just what I say. We want you to be an educated consumer. So we suggest that you avail yourself of the educational materials. The first step would be I can email you the Gold Education Starter Package, but then we have hundreds of hours of videos, many articles, and so on. And once you feel comfortable that this is what you want to do, and frankly, I know both you guys are Christians, so I can use this language with you after you pray about it, because after all, your money's not your own; it belongs to the Lord, right? So if you're going to spend it or invest it, then you should check with the boss. So, and just get back to me and let me know what you'd like to do, and we'll do everything we can to help you make some serious money with investment grade gold. Okay. Thank you, Tim. They can call my direct line. It's 561-753-5998. 753-5998. I'm over in Florida, so I'm East Coast time. Or if you go to the website, CFRN Gold, then you'll get an email back with a Gold Education Starter Package with my email address, telephone, and we will invite you to attend free webinars we do every Monday night on Christian financial concepts and precious metals. Well, thank you. I appreciate you guys playing along. It's kind of fun to do that. I think just actually, like, you know. Okay. Lord bless you all. Yep. Have a great day. Bye.
All right, sorry about that, guys. It did take a little longer than expected, but let's get our recap on. Now, if you did not grab a screenshot earlier of the Concierge Trade Alerts, I'm going to give you another whack at it. Stand by. Here we go. They went out at 9 a.m. this morning. Typically, they go out between 6 p.m. and 9 p.m. Eastern. But I guess I had my thoughts elsewhere. And when I was alerted this morning about the mistake I had made, I put them out. Okay. So it's going to look a little bit different today. In fact, well, we're on crude. We'll just start right here. 9 a.m. That's going to be that candle right there. During the life of this candle, in fact, it was actually 8:59 a.m. Eastern. And for crude, the alert said, consider being long 57.60. That's right here. Okay. There were guys in the Telegram channel this morning that I know, as soon as I got these out, it triggered during the same time frame. It went out at 8:59, so that actually is this candle, and then between 9 and 9:30, triggered at 57.60. Now from 57.60 to 58.60, and we've not quite arrived there just yet. That's a $1,000 per contract move. Crude pays $10 a tick. There's 100 ticks to a point. Gold also pays $10 a tick, but there's only 10 ticks to a point with gold. Okay, I think of it as pennies and dimes. That's how I sort it out in my head. Now, we have this thing called an exit signal. On a long trade, price will be on the left side of blue and climbing. It's called the CFMA1, that's the technical name, but I've taken to simply referring to it as blue and climbing or red and falling. So then it makes sense, it's visual. This little line is called the step line. And you'll notice that the step line, as we're climbing, steps over and steps up, steps over and steps up, steps over and steps up. And then you've got one here where we step up, we step over, and then you see the step up, and so we get 2 steps to the right side of blue and climbing. That's the market telling you that this move is beginning to run out of steam. We look for one more thing to confirm that the market is running out of steam, and that would be a red candle closing below the step line. We don't have one. Now we do have a trade to target overhead at 58.80. $10 a tick, 100 ticks to a point. From here to here, $1,000. Profit or loss, that distance, keep that in mind, profit or loss. And so from 58.60 up to 58.80, another 20 ticks, be another $200. So if it goes from the entry that was given to all the traders this morning because I was late. If it goes all the way, that's a $1,200 per contract move. Okay. We didn't get an exit signal there, but let me just make sure you know what one looks like. We have a similar move here from the left side of blue and climbing. Price starts to walk sideways. And we step over, step up, step over, step up, step over. But instead of stepping up, we step over again. The first red candle on a long trade, the first red candle to close below the step line after it crosses over, that's the exit signal. So on this move, and when did that take place? Yesterday morning. Let me look at the previous day's alerts. What was the long side for crude yesterday? Considering a long, 56.20. So the Concierge Trade Alerts that were sent out Tuesday night for the Wednesday session said consider being long right there, 56.20. The trade 2 target overhead was 56.65, and once it gets through that zone, well, then we're looking at the zone overhead. This is an example of price not quite making it all the way to the zone. Okay? We get used to price churning right at a zone, but this can happen. Okay? So we don't quite make the zone. Retracement. Price starts to walk sideways. That's what it does when a move runs out of steam. Again and again, on any extended move, look for this. It doesn't have to look like that, but most of the time, it's a variation of what you see right here. But the key is the red candle that closes below the step line, and that closing price was 57.05. Exit signal. Okay. So anyone who received this Concierge Trade Alert, if they had elected to take this trade and get long at 56.20, trade 2 target overhead, 45 ticks away at 56.65. You can take your exit there. It's discretionary trading, so of course you can take an exit anywhere you want, anytime you want. Because there was a lot of momentum, if you chose to stay in, once price is on the other side of a zone, then the next zone up becomes the trade 2 target. So if you only took it from here to here, it's 45 ticks, $450 per contract. When price can't get through a zone, this resistance cannot be penetrated. It's going to turn around, go the other way until it finds support. When it can't get through the support, it's going to just turn and head the other way. We expect this to be good resistance here, just as it was here. These are 30-minute candles, so we consolidated here for better than 30 minutes. And that brought us up into today's trigger. The ones I sent out at 8:59 a.m. this morning. And we don't have an exit signal as of yet. And that line there just represents a $1 move, 100 ticks. 57.60 to 58.60, $1,000 per contract traded. The trade 2 target, the weekly zone, overhead, 58.80. Oh, I'm sorry. No, that's a last week zone. The 40.45 I updated. This one is actually 59/05. Okay. That's the trade to target. The 5740/45, that's correct. That's a current this week's zone. All right. So that takes care of crude. We've already done the S&P, as I recall. Yes, we did. Let's go to the Dow. Okay. This morning, 9 o'clock. There's the 9 o'clock candle. Consider being short. 27735. And from 735, we made it down to 680. About 50 points, $5 a point, $250 per contract trade. The long side, $27855, hasn't been touched yet, but if this rally underway continues, it will be. Russell, the alert this morning said consider being short 1591. That's right there. And once it triggered, trade to target, weekly zone below. And that is a current weekly zone, 81.82 and 95.96. When we drop to a zone, we expect to find good support. Sends us back up to the BBC, which we expect to be good resistance until it isn't. Once we touch the BBC, then the high probability move is back to the zone. From 1591 to 1582, 9 points, $50 per point, $450 per contract traded. NQ. Consider being short 82.72. We were headed for the zone, the trade to target. But on the NQ, let me make sure I've got the right zones on there for this week. 82.30.31, that is correct. 83.84, correct. 0203. Yep, these are all correct. Okay, so from 272 72 to 46, yeah, about $500 per contract traded. Gold, consider being short 1464. Swing low 63. Swing low of that candle, and let me tell you, price did not stay there very long. That's rejection. So it came down, it blew past the trigger by all of 1 point, ran back up to the BBC, which we expect to be good resistance until it isn't. It was, and that sent price back down to the trigger. So that's the S&P, the Dow, the Russell, the NQ, crude, and gold. Good word for the day. We've been talking about ministry, how to succeed in ministry, how to do what God created you to do. Not easy. If it was, everybody would do it, I think. Acts 20:28. Take heed to yourselves and to all the flock. Another issue that leaders in ministry often grapple with is knowing how to feed others spiritually, but not themselves. Before leaving the church at Ephesus for the last time, Paul gathered its leaders together and said, "Take heed to yourselves and to all the flock, among which the Holy Spirit has made you overseers." Before you attempt to take care of others, you've got to learn to take care of yourself. Before God builds the ministry, He builds the minister. Otherwise, you become an easy target for the enemy. When the administrative side of church threatened to rob the apostles of their daily prayer and Bible study time, they called time out. In Acts 6:4, they said, "We will give ourselves continually to prayer and the Word." So leaders, don't just focus on preparing your lesson. You got to keep your soul prepared. And don't just set boundaries for your people, set them for yourself. Believing you can cut corners spiritually opens you to wrong relationships and destructive habits. As a result, you end up living on two levels: public service and private struggle. When that happens, you live with the fear of exposure. You feel like a hypocrite. You forfeit the confidence that's required for God to truly use you. It's 1 John 3:21. As a result, the church gets robbed spiritually and suffers, or whatever ministry that you're leader over. The people suffer. So what do struggling servants of God really need? Spiritual fathers. Paul writes in 1 Corinthians 4:15, "You might have 10,000 instructors in Christ, yet you do not have many fathers." I think most folks can relate to this. You probably have a Sunday school teacher that you admire, respect, have learned much from, and you have a pastor. Two very different roles, both very important. One is a teacher, and the other a spiritual father. So let me encourage you today. Find a mature, seasoned friend in ministry and reach for help before your problems get out of control. This is not just a good idea. Your survival in ministry depends on it. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.